Unbelievable free stock strategy in just 6 months. Sounds impossible, right? I'm going to show you the exact trades, rules, and the results. It's the free stock strategy. No market timing, no guessing, and almost no one's using it. You're never going to look at options the same way again. All right, guys, before we get started, be sure and hit like and subscribe down below and join the free Discord. It is free for now. We've just opened it up. We've got 86 new members. You can see here. Not sure when we're going to start charging for it, but if you join now, it's free for life. And if you go on the Discord, you can see we've got the OTM, the Option Trading Mastery trades. So I break down trades that I recommend and put on every week with the exact structure, as well as the reasoning why and the catalyst ahead. And then we also have a show your trade section, so you can see some of the members have already been showing their trades and successes, so we all make money together. And then we can talk about it in the free chat as well with new ideas. So let's grow together, and thanks. Let's start with the basics. PMCC stands for Poor Man's Covered Call. Normally, if you want to run a covered call, you need 100 shares of stock, which can be very expensive. But with the poor man's covered call, instead of buying the shares, you buy a long-term, deep in the money call option called a LEAPS. That gives you stock-like exposure at a fraction of the cost. Then you sell a shorter term call option against it to generate income. That's why it's called the poor man's covered call. You get the same benefits of a traditional covered call without tying up all that cash. Now let's talk about why this strategy actually works. And you don't have to time the market. Your LEAPS option gives you long-term exposure to the stock, so you're covered whether the market goes up or down in the short term. Meanwhile, selling shorter term calls generates consistent income month after month. Most traders ignore this because they think options are too risky or complicated. But here's the truth. When you follow the rules, the poor man's covered call is one of the most efficient ways to generate returns with much less capital. You're essentially renting out your stock exposure and getting paid for it. That's why it works, and almost nobody's using it. All right, guys, here we are on the Tasty Trade trading platform. I'm going to show you a couple of stocks that are ideal for this strategy right now. They're no-brainers. They're going to make money over the next 6 months to a year and beyond going forward. But Tasty Trade, check it out. There's a link down below. There's benefits if you go through my link. It's my favorite for trading options. All right, the first one is AMD. I'm sure if you follow me, you've seen my videos that dive deep into AMD. I'm not going to do that right now, but it's a major player in semiconductors for AI data center growth. It's highly liquid, consistent trading volume. It makes it perfect for the poor man's covered call because you can sell with tight spreads. And if you see here you can go right here to the chart. You can see there's been a recent pullback. So you want to go, my target for AMD is 300, 350 easily in the next 6 months to a year. So I see it moving up consistently. You want to pick a stock that you see is going to move up. You can go right here on Tasty Trade. You can check out the financials. You always want to pick a stock with good fundamentals so you can see the income statement, revenue increasing year over year, and assets and liabilities as well. So let's go to the trade page. We're going to open up. I'm going to go out. You can go out to, I usually like to go out about a year, but for AMD, it actually sets up better at September right now, 292 days. That's plenty of time to hold this. You open that up, and what you would do, you've got calls on the left, puts on the right. So to duplicate owning 100 shares of stock or simulate, we're going to buy, I'm going to buy, actually I'm going to do the 210 at 48.80. The 210, so it's slightly in the money, is $7 in the money. So we want to go in the money on the call, the LEAPS call option, and then we can go to the mid price here, and you can see 48.60 is the mid price. So to control 100 shares of stock, you'd pay $48.60. However, if you purchased 100 shares of stock of AMD outright, it would be $217 stock price times 100 shares. That's $21,754. So instead of paying $21,000, you're paying less than a fourth of that, less than 25%, $48.60. But that's not all. Okay, so let's go to the curve mode. You can see the analysis page. Just like owning the stock outright, as the stock price increases, you increase in your profits as well. So when you get up in this $300 range, you definitely have doubled your money. If you look at the P&L right here, P&L at expiration at 333, you're at 6,377, $6,377 on a $4,800 investment. All right, we go back to the table mode. We're going to close this up. Now, the poor man's covered call, we're going to sell a short call against it. So we're going to go closest to 45 days to expiration is what I like to do. So I'm going to go out to the 47 days because there's 47, 19, and then 82. So the January 16th, 2026. We'll open up that chain. Now we can go out to either the 240 or the 250. Let's see what we can collect. We can collect $8.35. So we've got calls on the left, puts on the right. So we want to sell this time. So we're not buying. Buying is right here. Selling is right here. So we can sell the 250 for $6 and bring that price down to $42.57. So that $6 automatically goes in our account. So it subtracts from that. Let me do it again. From the 48.80, 48.60. So you go right here, you click on it, and you watch that price drop to 4,200. 6. Now, what's 600? If we did that every month, 600 times 6 months, 6 times 6 is 36. That's not quite 6 months payoff, but if we go to the 240, $8.35 is what we can collect. So $8.35, that still gives us a 240, 217 to 240. So we can make $23 on the upside on the leaps. And then any downside, as long as it stays between 240 or below 240 at expiration within the next 47 days, we keep that entire $8.35. So, and the 34 delta gives us a 66. You subtract it from 1, 66% probability of profit of it staying below that 240 price. So right here at 835, the price is the cost is $40.20, and then if we can make $800 every month, 8 times 6 is 48. That more than pays this off in 6 months. And at the end of 6 months, you're basically controlling that stock for free. So that's theoretically how it works, and it's proven to work over and over. So with this, you would just hit review and send and place the trade. I'm going to show you one more though. Let's close this out and let's go to APLD. APLD right here, Applied Digital, another extremely strong stock. You look at the pullback, it's APLD is a company that provides digital infrastructure and data to the data center space. So it's another AI stock, and while it's smaller than AMD, it has a lot of interest and options activity. So if you want to really grow with they've got huge contracts. I've done videos on this as well, but huge contracts with the major players out there as well. Amazon, Facebook, Meta, sorry. But they've got a huge following. I'm not going to do a deep dive into APLD, but it's a no-brainer for me. Let me show you what I've done in APLD just over the last 180 days. You can see $7,000, $69.64 that we've made in APLD just doing this strategy, the cover call. So if we open up the trade page, actually you can see right now I've got 3 on and 3 call options against it at 35. We're trading at 27 right now. So let's real quick go through it. I'm going to go out 411 days to expiration. I'm going to go a little quicker this time. We're going to go to the 25 and we're going to click on the buy, $12.50. So actually mid price is $12.05. So $1,200. We can control 100 shares of stock instead of paying 27 times 100. Instead of paying $2,700, less than half, $12.05. Now we go close this out. we sell that January call against it, we can go out, we can go all the way to the 35 and collect $2.02. So watch when I click on this to sell it, this will go down by $200. Boom, $9.95. We hit review and send and place the trade. Just like owning the stock, we control it for $1,000. We can do this every month, $200 a month times 5 months. It pays off in 5 months. And again, proof's in the pudding here, guys. 180 days, 6 months, 69.64 profits. Now here's the most important part, the rules. The poor man's covered call works only if you stick to the rules and have a disciplined system. This is how we make the strategy repeatable month after month and year after year. Rule number 1, always buy leaps with at least 1 year until expiration. That gives you long-term exposure and avoids the decay that kills shorter options. Rule number 2, sell calls that are 30 to 45 days out. This is the sweet spot for collecting premium without overexposing yourself. Rule number 3, roll your short calls if they get too close to being in the money. Don't wait until expiration and manage proactively. And rule number 4, never over leverage. Stick to 1 short call per leaps contract. This keeps it simple, defined, and manageable until you really get comfortable and have an idea of what is the best lot size, whether you're a one launch, one tranche, 2 tranche, or 3 tranche trader. So that's the way to handle it. So there you have it, the poor man's covered call free stock strategy. In the last 6 months, several years, I've had unbelievable results. Now it's your turn. If you like this video, please be sure and like down below and subscribe. There's also a link to the free Discord in the pinned comments below. If you join right now, you'll be one of the first 100 members and it will be free for life. It won't always be. And there's also a free options workshop as well as an options mastery course. Be sure and leave a comment down below and let me know which stock you like best right now for the poor man's covered call, and watch this next video.